Well, I'd just like to emphasize, any mining companies out there, please mine more nickel. Okay, wherever you are in the world, please mine more nickel, and don't wait for nickel to go back to some high point that you experienced some 5 years ago or whatever. Go for efficient, as environmentally friendly nickel mining at high volume. If Tesla will give you a giant contract for a long period of time if you mine nickel efficiently and in an environmentally sensitive way.
Tesla is on the verge of giving a large nickel contract to one mining company, and not surprisingly, this opens up an investment opportunity with massive potential. The stock that I believe will come out on top is Vale Mining, ticker symbol VALE. Before we get into Vale Mining's business operations, let me explain why I see Vale Mining as an enticing investment. The investment play I see with Vale Mining is the pick and shovel play. The pick and shovel play was named after the California gold rush in the 1840s and 1850s. In order to mine for gold, each person would need to purchase a pick and a shovel. After that person purchased the pick and shovel, they would have a chance at finding gold, but it certainly wasn't guaranteed. While the miners weren't guaranteed gold, the company selling the pick and shovel was guaranteed profits. The investment strategy is that instead of searching for gold with the pick and shovel, we should invest in the company selling the pick and shovels. That way, instead of investing in the quote-unquote next Tesla, we should invest in the company supplying the materials for EVs. After all, the chances of an EV company becoming the next Tesla is very slim. On the other hand, it's almost a guarantee that EVs are going to dominate the next decade or two. This is where Vale Mining comes into play. If you did a quick Google search of Vale Mining stock, you would see that the stock is already up 24% in the past year and may think it's too late to invest. However, this surge in stock price is not because of Vale's potential in the nickel segment, but rather because of Vale's iron mining operations. Over the past few months, there has been a surge in iron futures on the possibility of an early 2021 shortage. The majority of Vale's business is in iron mining operations. Vale's 20F filings detailed how iron represented 62% of Vale's revenue, whereas nickel represented 11% of its revenue. Although iron operations remain Vale's main sector, the mining company has risen to the spotlight when it comes to nickel mining. In fact, Vale mines the most nickel out of all of the nickel mining companies. We'll soon go over the competition and why Vale comes out on top. Over a span of 5 to 10 years, Vale's nickel output has the potential to go from 11% to over 40% of its revenues due to the increased demand for nickel. As a result, while iron operations are going well for Vale, I see nickel mining as the growth driver for the company. Vale currently has a mining facility in Voisey's Bay that it looks to expand for more production. The company knows that the demand for nickel will continue to increase over the coming years. In essence, Vale Mining got the message from Elon Musk's call for more nickel, and the company will secure a giant contract to supply Tesla's demands.
So, hopefully this message goes out to all mining companies. Please get nickel.
According to a Reuters report in October of 2020, Vale has held talks with Tesla and many other EV companies. Mark Travers, Vale's executive director of base metals, told Reuters that Tesla and other automakers need to ensure there's sufficient nickel available to produce the number of batteries required for EVs over the next 5 to 8 years. So that is the nature of the discussions I'm sure that is occurring across the industry right now, and without specifically commenting on Tesla, those are the conversations we are having right now. When Reuters asked Travers whether Vale was talking with Tesla, Travers stated, "Yes, absolutely. Vale is listening to Tesla's demands for nickel," which was evident when the company dedicated $2 billion to low-carbon mining projects. This includes the electrification of underground vehicles, fuel switching, and heat recovery. Travers stated that mining in an environmentally friendly way has been a key focal point in discussions with automakers and other EV participants. This throws a major hint at where Tesla's mining contracts will go. The mining company with the second most amount of nickel in output is Norilsk Nickel, and recent news shows that Tesla likely won't deal with that company. This is because Russian indigenous communities have been protesting against Norilsk. According to Gennady Shachukin, a member of the Dolgan ethnic group, in late May, a reserve fuel tank at a power plant near Norilsk burst open. This reserve tank flooded the local waterways with 23,000 tons of diesel oil, which drifted for miles and turned one of Russia's rivers into a bright red color. Norilsk Nickel claims to have acted swiftly to contain the pollution. However, the Russian indigenous communities think Norilsk have done the opposite. Shechukin said that we expect that the river was poisoned for a long period. Maybe for several years, there will be no fish in these rivers and in the lake. Believe it or not, Tesla has been watching closely. On September 30th, 2020, a new report stated that Tesla would meet with Russian indigenous activists to boycott Norilsk Nickel. This is where Vale Mining comes out on top. In 2019, Vale's nickel production was 208,000 tons of nickel. In the midterm, Vale believes that nickel production can ramp up to 400,000 tons. This is a 2 times increase and easily meets Tesla's demand of 275,000 tons of nickel every year by 2025. On the other hand, the other competition outside of Norilsk has nowhere near enough nickel to supply Tesla's demands. For example, Glencore Mining looks to mine 120,000 tons, and IGO Limited only expects to mine 27 to 30,000 tons of nickel. While these companies could secure a small contract, it'll be difficult for them to compete against Vale's advantage, which is the economies of scale. Now let's go more in depth on the nickel opportunity for Vale. Ultimately, in order for Vale Mining to supply nickel to EV manufacturers, there needs to be enough cobalt and lithium supply. Tesla has vertically integrated into lithium mining and has eliminated a significant amount of cobalt in its batteries. Of course, the EV competition recently has been, to say the least, weak, but assuming that other companies rise up and the cobalt supply hits some constraints, then overall nickel demand just for EVs would reach around 250,000 tons by 2025. On the other hand, assuming that cobalt does not hit any constraints, then analysts estimate that overall nickel demand for EVs may surpass 800,000 tons by 2025. Now, whether Vale can supply that much demand all comes down to the company's expansion. If demand sits at 800,000 tons, and Vale and other mining companies can only supply 600,000 tons, then the price for nickel would skyrocket and give Vale incredible margins. Not only that, but with the rise of the Cybertruck, nickel demand would increase with the use of stainless steel. 304 stainless steel, which a Cybertruck will use, contains around 8% nickel in it. Assuming that the Cybertruck body has 2,000 pounds of stainless steel, that would be around 160 pounds of nickel, which is equivalent to 72 kilograms of nickel. If Tesla produces 500,000 Cybertrucks, then that would already be roughly 40,000 tons of nickel. Of course, that's not much relative to the total demand, but it's still increased demand nonetheless. In terms of valuation, Vale seems to be extremely undervalued. According to Seeking Alpha, the sector median for forward PDE ratios on a GAAP basis is 24. On the other hand, Vale's forward PDE ratio on a GAAP basis is 9, which is 60% less than the sector median. When we take a look at Yahoo Finance, the numbers get even better. According to Yahoo, Vale has a forward PDE ratio of just 6.29, which is extremely low for a company that is expected to have its sales grow 12% in 2021. Overall, Vale Mining looks to me as a very intriguing long-term investment. While it certainly doesn't have as much potential as other stocks like genomics companies, the company's trajectory looks to me like a low-risk, medium-reward investment. All of this is definitely not financial advice, and you should always do your own due diligence. Let me know what you think about Vale Mining in the comment section below. Do you think Vale looks like an enticing investment, or do you see other stocks as better investments than Vale? If you enjoyed this video, please hit the like button and subscribe, and I'll see you in the next one.